Welcome to another S&P 500 analysis. Today is November 4th, 2022. You have just witnessed the post-FOMC announcement price action for the S&P 500. The Fed announced its latest rate hike this week and as expected, 75 basis points. And as you can see, the initial market reaction was positive until Jay Powell started his press conference. Then price started to reverse. Here you see the S&P 500 dropped 3.5%. or 135 points in 1.5 hours. Now, if you did not hear what Jay Powell has to say, I suggest you go watch my last video. I put the link in the description below and also at the end of this video. So where's the S&P 500 headed next? In this video, we'll analyze the price action of the indexes and the market sentiment, market internals, and see where the market might be headed. We're also going to take a look at the relative strength of the FAANG stocks and see how they might be affecting the market in the near future, along with looking at the performance of the 10-year yield, the US dollar, oil, gold, and silver market. Stay tuned. Now let's take a look at the S&P 500 on a bigger picture on this weekly chart here. As you can see, this week we had a 213-point range. It lost almost 135 points or 3.45%. And notice that it printed a engulfing candle or a outside candle, and it is a bearish candle. So what it means is encapsulate the high and the low price, encapsulate or engulf the previous week candle. And also the other thing is it's still above this pre-pandemic high 3393.52, and it is below this declining 10-week and 40-week moving average, and continue to be in this lower low, lower high price pattern. So until it break above this pivot high, which is 4325.28, it is still inside of this declining price pattern. Now let's take a look at this sentiment chart here. On Friday, the S&P 500 actually finished on a positive after initial losses. And we noticed that the VIX also came down a little bit. A couple of days ago, we're up at the 26 level. Right now, it's sitting at 24.55, but it's still inside of this 2030 zone. So the market participants are still a bit fearful, not complacent, or neither are they panicking. But also the put-call ratio came back inside of this 0.75 to 1. Right now, it's pretty much in a hedge mode between the 0.7 and the 1 zone here. Now, when it get below the 0.75, and especially get down to the 0.5 or 0.6, then it's all risk on. And here we see the up-down volume ratio on Friday was 2.8 to 1 in favor of the up volume, and the advanced decline, there were 1,335 more advancing issues than declining issues. Now, one thing that we notice is the New York Stock Exchange, the number of stock making new 52-week low is also starting to come up a bit relative to the number of stock making new 52-week high. You can see there is still 132 more stock make new 52-week low than the number of stock make new 52-week high. And here in the New York Stock Exchange cumulative AD line, the advance and decline line here is basically still pretty much moving in synchronous with the S&P 500. Now, also on Friday, we saw the NASDAQ 100 came up and gained a little bit over 1.5% or 166 points or so. And right now, we're seeing that the up-down volume ratio is only at 1.5 to 1 in favor of the up volume. So that is not a very impressive stat. And also, there were only 760 more advancing stock than declining stock. So again, that is not a broad market advance. There were 353 stock in the NASDAQ market make new 52-week low versus only 93 stock make new 52-week high. So the 52-week low outnumbered the 52-week high by a margin of 260. And here looking at the NASDAQ 100 and the NASDAQ cumulative AD line, notice that yesterday on Thursday, the NASDAQ 100 actually closed at a lower low compared to this October closing low here. But the advanced decline line is actually higher. And the reason we're seeing this is because of the FAANG stock, which we'll also take a look at later on. on the relative strength chart on the FAANG stock, and we can see, how those stocks are affecting the indexes. Now let's take a look at the yield and the other market, the metal market and the crude oil. See, the yield came up and got back above the 4% after the FOMC latest rate hike. As a matter of fact, it gapped up, although on Friday it pulled back a little bit, but we're still looking for this 4.33 to get taken out. Believe this rate is going to go higher. And here today on Friday, the dollar pulled back. We did get a move on the upside yesterday when the FOMC announced the latest rate hike. Remember, we had this little price channel here, or a bull flag. So I wouldn't be surprised to look at the dollar to pull back to somewhere around this 109.50 area. Basically, this confluence somewhere around here near this trend line and also this channel. And here's crude oil. Crude oil move up with the weak dollar, and look at this. We have this little bit of a trend line here. Right now, we're looking for oil to break above this 92.50 area and see would it be able to push back up above this 100. So these are the pivot high that we'll keep an eye on and eventually come up to this composite value area high up here at 107 and eventually get up to this 110 area. And with the weak dollar, we see silver, the precious metal, also move up today. And we see silver, starting to bounce off of this $18 level a couple of weeks ago. And we're saying that if it could push above this 20, then there's a possibility silver could come back up and test this 22 area. So keep an eye out for continuation of the dollar to pull back. And most likely we'll see silver to continue to push up and watch this $22 area. Gold also had a rally on Friday with the weak dollar, and it bounced off of this 1620 and got above this 1650 area. So right now, we'll basically see would it be able to get above this 1700. If it could get above 1700, we'd be watching at this pivot here somewhere around the 1740 area. Now let's take a look at the index, starting with the SP 500. As you can see, the SP 500 closed right inside of this lower range of the weekly expected move on Friday. See that it came down and backtest this zone here and appeared to be holding on the close. So we'll see next week to see will it be able to bounce up. And next week's expected move upper range is between 39.10 and 38.87.65. And the lower range of the weekly expected move is between 36.53.45 and 36.30. So what we'll be watching for is would it be able to get back above this pivot high, which is somewhere near this 38.2 retracement above the 38.15. If we could get above that, then look for a move up to this upper range of the weekly expected move. Now, if it is unable to stay above this pivot high, then we'll look for a pullback into this lower range of the expected move and possibly come back down and retest the June low. And that's basically in confluence with the lower range of the expected move. And if it dipped below it, then look for the October low to get retested or come down to near this 50% retracement near 35.05. Now, also the other thing to take note is right now, as of Friday's close, it is still 21% or almost 22% below its all-time high. Now, looking at the NASDAQ 100, as you can see on the NASDAQ 100 index here, it closed below the weekly range and below the lower range of the weekly expected move. Although it finished with a hammer type of a candle on Friday. Next week's the upper range of the expected move is 11,370 and 11,280. And the lower range is between 10,433 and 10,350. Now, the thing to note right now is to see would the NASDAQ 100 continue to push back up and possibly tag this upper range. And hopefully it will try to get back above this level here, above this 11,600. Basically, what we're going to be watching for is to see would it be able to move above this upper range and work toward this 11,600. And if it doesn't, then we're basically looking for a price to pull back into this 618 dip below this 10,589 and into the lower range of the expected move between 10,433 and 10,350. And here we're looking at the Russell 2000. The Russell 2000 came down and backtest this breakout pivot here, more of like a W double bottom type of a pattern. And right now seems to have passed the test and see would it be able to continue to move up, get up to this major move, which will be somewhere around 1909. Now, the other thing is if it is just a little bit of a fake out and come back in and dip below the 1770 area, then watch for this 1712 level or 1700 level, back here for potential support test. And if that failed, then look for these low to get retested somewhere down at the 1650. And the Dow Jones Transportation seems to be holding up pretty well. So right now, we basically look at the transportation seems to be able to pass this test down here on a back test. So right now, we're essentially looking for this major move up here to this 14,288 or up at this trend line here. So right now, we're going to see it would continue to bounce and take out this 38.2 and also in confluence with this 618 major move somewhere around this 13,800 area. And if we could break above this, then look for the possibility of make itself up toward this, essentially this pivot level here around 14,300. Now on the downside, if it is unable to hold above this 13,100 area and decide to dip back below the 13,000, then look for this 50% retracement down here at 12,360 area to get back tested and see would it be able to find support. And if it doesn't, then we'd be looking at the October low below this 12,000 level. In addition, also notice that the transportation is still 26% below the all-time high. And here we are looking at the Dow Jones Industrial. Notice the strength and the performance of the Dow Jones Industrial. It actually came up to this trend line here and then got a little bit of a pullback. And on Friday, it actually closed above this major move here. Now, the other thing is I also have put in another major move. Basically, it's a symmetry move. It's between this swing and from this pivot, the Thursday low and pivot up here to this 100% major move somewhere around 34,592. And that would be above this pivot high here. Okay, so, and on also the 618 major move, is somewhere around 33,500, and that is in confluence with this little bit of a price zone here or this pivot high. So those are a couple of possibilities on the upside. If we see the Dow Jones Industrial continue to push up, then watch for this 33,500 as the next potential resistance. And if we could get to that, then look for that 34,500 area up here near this 100% major move. Now, on the downside, if it decides to pull back, then look for this pivot here, this area 31,000 for potential test of support. And by the way, the Dow Jones Industrial is only a little bit over 12% below its all-time high. And here's the New York Stock Exchange Composite Index. Right now, the Composite Index is only a little bit less than 16% below its all-time high. As you can see, it also came down and tested this pivot high here, and it passed, and right now it's pushing back up to this 14,800 area. So be watching this major move here, basically this double bottom major move. Here's the 618 at 15,000 to see would it be able to get up to this 15,000, which is also in confluence with this price zone here. And if we could get above this 15,000, then look for a push up to this trend line here, which would be also in confluence with this 100% major move somewhere around 15,430. Now, if it's unable to hold this pivot high and decide to pull back, then look for this 382 somewhere around 14,000 level and see would it be able to find support. Essentially, that is the June low. And if it's unable to find support at those June low, then look for the October low to get retested somewhere down here at 13,400. Let's take a look at the relative strength chart on some of the indexes relative to the S&P 500 and also the FAANG stock, since a lot of the FAANG stock like Apple and Google is breaking down. Be interesting to see the relative strength, how they are performing relative to the S&P 500. As you can see right now on the screen here, you see this NASDAQ 100 is underperformed relative to the S&P 500. And here's the transportation. The transportation seems to be holding up relatively well. And here's the industrial. This is Dow Jones Industrial. See, here it is outperformed the S&P 500. And even the Russell 2000, the small cap, is a little bit outperformed the S&P 500. And here the New York Stock Exchange Composite is outperformed the S&P 500. So this kind of tell you that how the FAANG stock is distorting the S&P 500 and the NASDAQ 100 due to those large cap tech stock. And here's the FAANG index, the New York Stock Exchange FAANG index. You see that it is underperformed relative to the S&P 500. Now let's go and take a look at the FAANG stock. Starting with Facebook or Meta, you see there's underperformance. And here's Apple. Apple is breaking down finally. It's also underperformed relative to the S&P 500. Likewise, look at Amazon. It's really got blown out, taking to the woodshed after the earning report. And here's Netflix. Beware of Netflix, although it did outperform a little bit on this earning gap here. Then look at this right now. It's kind of dropping back. So look for that gap to get filled and watch for Netflix. It could, start breaking back down below the gap again, because right now it is showing a little bit underperformance. And here's Google. It's also underperformed. And watch Tesla. You see Tesla is already starting to underperform way back here in September. And right now it is continuing to break down. So watch it. It's probably got more downside to go. And here's NVIDIA. Recently, the semiconductor is a little bit outperforming the S&P 500. We see NVIDIA still showing a little bit outperformance, but I don't believe this will last. So just be careful with the semiconductor sector. And here's Alibaba. Basically on Friday, the last couple of days, we just got this rumor about China might be relaxing their COVID restriction policy. And that kind of give it a little bit of a dead cat bounce on these stock here. The same thing with Baidu. So those are the relative performance chart on the FAANG stock and some of the indexes. In summary, the market is in the process of repricing on what it heard from the Fed, particularly from Jay Powell. By no means the market is telling us the low is in. To the contrary, it is telling us to be prepared for lower prices, especially those large cap FAANG stock that are just at the beginning of valuation adjustment process. So what do you think? How low or how high you think the S&P 500 will go by the year end? Post your thought in the comment section below. And be sure to smash the thumbs up to help promote this video. Thank you for watching and stay safe.